What's going on, ladies and gentlemen? Welcome back to Young Money Investing. This is the show where we help everybody, no matter how young or how old, achieve true wealth in their lives. It's Sunday evening. It's time for another weekly technical analysis with your boy over here. We're gonna look at some small caps. We're gonna look at some large caps. We might get into a little bit of Bitcoin, a little bit of cryptocurrency. So stay tuned. And without further ado, let's get into it. So, starting off on the weekly time frame, we are looking at the S&P 500 here. You can see that our bearish triangle is still intact. Now, unfortunately, there's not really going to be a whole lot of movement, I don't think, until this triangle breaks one way or the other. So whether it goes up or down, you're not going to see a whole lot of sharp movements. I might expect price action to move up just slightly to about that 4150 level. We're currently just under 4100. So maybe look for some longs this week. Let's zoom into the daily time frame here. We are respecting this trend line. We are respecting our support line. There's also a little bit of support here at 38.94, it looks like, and then 41.85. Well, yeah, about call it 41.50. 41.50 is that number I mentioned before, and that's our resistance to the upside. So we might come up and kind of touch that and then reject back off to the support. We might go back up to this trend line and then reject back off. We might go back up and break it. I really have no idea, but one thing I do know is that we're going to make some money this week because we're traders and we make money every week. So let's go ahead and take a look at the Russell here. We'll zoom out to the weekly. Pretty similar story to what's happening on the S&P. I did mention last week that I don't like this triangle as much for the reason that it's a steeper angle and has been tested fewer times. On top of that, you'll notice over here as well as over here, and then if we even go back to 2019, honestly right up until the COVID crash in March of 2020, the Russell tends to have these long periods of consolidation and then kind of very sharp movements either up or down. So right here, consolidation, sharp movement down, consolidation, sharp movement down. So that's kind of what the Russell tends to do is it will consolidate a little more. We're looking at the daily time frame now, and it's a little bit more pronounced. Consolidation, move down, consolidation, move down, consolidation, move up, consolidation, move down. So I would look for the Russell to kind of gather some consolidation first, some type of basing pattern before it either breaks higher or lower. As far as this trend line goes, I mean, we had a very, very good couple of days. You can see we kind of caught this bottom here and then some very strong green candles, as well as this is a slight gap. Let's see, our close is 1846.90, open is 1857, so about a 10-point gap. So look for that to fill on the downside. As far as resistance level goes, I kind of like this 1941 level. So if we start getting back up into that territory, I would definitely start to be careful on anything to the long side. And, remember, gap fills are personally one of my favorite trade setups. Very high probability of success. And it's a low risk, high reward trade if you play it right. So that's the type of trades that I'm after. So maybe some more upside in the near future until we get up into that 1940 kind of area. We could come touch this trend line again before rejecting off. Personally, I don't really see this trend line breaking to the upside on either the Russell or the S&P, but remember, this is a personal opinion. This is not financial advice, so please do not buy or sell based solely on this. Let's take a look at Bitcoin. Bitcoin is still boring, still kind of consolidating. Honestly, I think that we've kind of seen the end of the bull run here. I'm not expecting any crazy movements like this anytime in the near future. So I would expect a lot more sideways movement, a lot more smaller ups and downs. You know, there's still money to be made trading on the day-to-day, week-to-week, but overall, I would say Bitcoin and kind of the crypto market as a whole, this is just a really good time to accumulate. I know I'm accumulating, you know, I'm dollar cost averaging every week, every 2 weeks. I'm just buying a little bit. So I think that's what this is a great time for. I wouldn't expect huge volatility on Bitcoin. Maybe on some of the altcoins, we might get a nice altcoin season. That would be nice. But other than that, it's really just, there's not a whole lot going on. So the last thing I want to touch on is the dollar index. And what I'd really like to highlight here is this double bottom, which was back in May of 2021. And since then, we've just gone on a tear, rising 20% in, let's see, just about a year. Now, for a currency, for the dollar, phenomenal. 20% in a year, phenomenal. Those are great numbers, but I really just wanted to highlight the importance of a double bottom. And as a technical pattern, this is what you look for. You look for a double bottom and then that huge run up. And let's actually measure to the high here. You know, we're currently up 20%, but we've gone as high as about 24%. So, and part of that is geopolitical, of course. You know, Russia invaded Ukraine, amongst other things, but still, the importance of the technical double bottom being put in place, one of my favorite patterns to trade. I'm not a huge pattern trader. I'm much more price action based than I am pattern based, but when I see a double bottom, man, I just start to salivate a little bit. So thank you guys so much for tuning in. I appreciate every single one of you. Please go like, share, and subscribe this. I love you all. You guys have a great week. Peace out.